What's going on YouTube? It's Sank and I make videos on the stock market. As always, I've got a jam-packed one for you today. But if you don't already have a Trading 212 account, do use my link down below and you'll get a free share of stock. So as it's the weekend, I'm here to give you guys the plays as well as the strategy to enable you to dominate in the stock market next week. I've got a bunch of different plays for us to enter next week, including penny stocks, growth stocks. We're going to kick things off with what could potentially be one of our home run plays that we're going to enter into next week. So up on screen, we have Corporate University, that's ticker symbol COUV, currently standing at 32 cents. Guys, this is an acquisition company, right? Similar to an Alpine 4 Technologies. They go out, acquire different businesses in high growth industries. That's how they come back and deliver value to us shareholders. So they could, if they execute the strategy correctly, provide explosive share price growth. So firstly, I want to give you guys a little bit more color on the business, then talk about entry points, buy zones, and how this stock could potentially play out over the next couple of weeks and months. Then talk about if it's a long-term play or a short-term play and the strategy to go with it. So there's two subsidiaries that they have that I want to put on your radar. And the first one they acquired on the 4th of November. Now the date is key, so keep that in mind. This is a medical company, right? And this medical company distributes personal protective equipment, particularly face masks. The company is called Medicivo. Now their face masks are said to be a lot better than the existing face masks on the market because they are made with graphene. And this graphene is a material which enables 98% of COVID-19 particles to be filtered out. It's said to be a lot more durable, a lot more stronger, and you can wear it for up to 15 days. And then on the 16th of December, they acquired their second company, which is only about 40 days later, a company called Carbon Iron. Now Carbon Iron, they're involved in battery development and they claim to fix all the pain points with current lithium ion batteries. So that means the batteries are going to last longer on one single charge. They're going to charge a lot quicker, and also there's no chance of explosion. Now they've come out with some pretty bold claims. They say that their batteries can charge 50 times faster than lithium ion batteries, and they're going to enable EV cars to be able to be charged in just 5 minutes. So if they can pull this off, this is a pretty big deal. Now, Corporate University is shaping up to be either a short-term play or a long-term play, but I'm leaning more towards a short-term play on this one, right? Because their share price has some explosive action at the moment. Let me just show you. If I jump into the share price graph, as you can see, we have some huge jumps up in this share price, right? Equally, you can have massive drops. So this share price is very volatile. So that's something to put on your radar, right? If you're jumping in on this play, do expect volatility, huge volatility in this play. This massive drop here was caused by the delay of the completion of their acquisition of Carbon Iron, which they then came out and said that's going to take place this month, and that brought the share price back to life. So strong investor sentiment brought that share price back, but we're still trading below their 52-week high, which is something that I like to see. So in terms of why I'm going to play this one in the short term initially, right, the first is that they are very acquisitive at the moment. They acquired 2 companies in the space of 40 days, and I wouldn't be surprised if the next one is shortly coming, and that is going to act as a catalyst to boost that share price up, right? The stock is growing with interest at the moment, and this is going to lead to higher prices. Now, they have come out and said there's a lot of industries, high growth industries that they're interested in at the moment. They're looking at medical supply, they're looking at biotech, and we know that they're now interested in EV, right? So I'm waiting out for a press release on another acquisition in the short term. The second is that their CEO has come out numerous times and said that he is very interested in uplisting this stock to a bigger exchange, the Nasdaq. Now, we saw what happened to Alpine 4 Technologies stock price when they announced their uplisting. That stock absolutely exploded, and I wouldn't be surprised to see the same stock price action with Corporate University on that announcement. Now, I've gone through with you guys what an uplisting can do for a company. It has numerous benefits, right? We know that they can then access financing at a much cheaper rate. They can then go out and acquire businesses at a much cheaper rate. They can refinance their existing debt, means they pay less interest each and every month. It also means that the stock is now a lot more liquid, right? There's going to be a lot more capital inflows to the stock and various other advantages. So this is a huge benefit. So he is very keen on doing that. So I wouldn't be surprised if we see an announcement for that very soon, and that's going to push that stock price up. And the third reason I'm initially looking at this as a short-term play is that the companies that they currently have in their portfolio just require a little bit more monitoring going forward, right? Now, we know that they have Medicivo, the face mask distribution company, but forecasts say that face masks will decline right after this year. Now that makes sense given the rollout of the vaccine and the virus dying down and less people needing to wear face masks. So this year I wouldn't be surprised to see an explosive revenue number in Medisivo, but going forward that just needs to be monitored, right? Their strategy just needs to be monitored. Maybe they're going to use the graphene material technology for another purpose, who knows. The second subsidiary they have, Carbon Iron, they're still heavy in the R&D phase. They have 30 patents, but again, if there's delays in product delivery, commercialization of their products, again, this could put downwards pressure on the share price over time. So we just want to monitor their acquisitions, monitor what they're doing with these companies if we're going to play this one in the long term. Now, one thing I do like and does give them some long-term potential is it does seem to be that they are acquiring disruptive businesses, right? That seems to be their key business model. So what do I mean by that? I mean game-changing businesses. I mean businesses that are beating the competition or have that extra something. So if you look at Medisivo, their face masks have this graphene material which enables them to be, or claims to be, better than the existing face masks on the market, right? If you look at their other subsidiary, their other asset, Carbon Iron, because of this Carbon Iron technology, it enables them to be just that step above the current lithium ion battery. So they do seem to have this disruptive business model which might play well in their favor in the long term. Another thing I want to put on your radar is right now they have a market cap of about 150 million, and I can definitely see this being driven up this year as they acquire more businesses in high growth sectors. I'm talking medical, biotech and EV, right? There's a lot of potential there. In terms of entry points, guys, if you can't handle risk, right? If you want to limit your risk, try and get in below 25 cents. If you can handle more risk, I would say if you can get in around 30 cents, that's a good entry point, because I can see this stock price being driven up to $1 this year, right? And that should give you a lot of upside whether you get in at 25 or if you get in at 30. Now, I know a lot of you locked into the channel like to take early profits, so this could be an ideal play for you to jump in, establish your position and wait for the pop off in the share price. When it happens, take profits and then cut out of there. Now, I'll be monitoring the company constantly to assess their long-term potential and giving you guys the updates, because what we might do is we might buy in again for round 2. So alright guys, if you've been rocking with the channel, you know what time of the day it's. It's question of the day time. This question comes from Jeannie. The question is, can you discuss averaging up and down? So thank you very much for sending this question. I know it's going to help a lot of people. Guys, if you have any questions or comments or companies you want me to look at, leave them down below for me. Alright, so first things first, averaging up is where your average holding price is below where the current share price is trading. You then buy some at market rate and that brings your average slightly up. Averaging down is where your average holding rate is above where the price is currently trading, you then buy some at market rate and this brings your average down. And both are effective tools to help you guys make money, right? Now, to give you some examples, the latest company that I averaged down was Alibaba, right? So Alibaba did drop significantly earlier this year. I then bought some, took advantage of their low price, and that means I averaged down, because going forward, hopefully everything goes well with the business, they should recover, and they should be onwards and upwards, right? And I would have made money by doing that in the long term. Now, the last company that I averaged up was Alpine 4 Technologies. So I bought in very low a couple of weeks back, and because of the positive business momentum, because they're showing that, they're moving in the right direction, the CEO is aligned, he's looking for growth and they're doing the right things, the industry is moving the way I want it to move, I then averaged up slightly, right? So bought in at the dip on Friday at about just below $3, about $2.85, $2.90, and that was quite significantly above my average price. But going forward, I do see a lot of potential in this stock. And ultimately, by doing both of them, I would have made money in the long term in the stock market. So as long as you believe in a stock and they're moving in the right direction, they're doing the right things that they need to do to get them from this place to a better place, right? Averaging up or down is going to make you money in the long term. So that brings us to the end of the video. Please hit a like, it really helps the channel out. If you're new, do go ahead and hit that subscribe button. I post each and every day. I've got a lot of content coming for you guys over the weekend, penny stock videos, growth stocks to enter next week, right? Get ready for that Monday morning opening bell. So as I always say to you guys, do check into the channel each and every day. The stock market is rapidly moving. I'll catch you guys on the next one.